There is a growing possibility that the United Kingdom may just leave the European Union, and it's continuing to add to market uncertainty, and it is also fueling the concern about a potential global slowdown. And concerns of next week's UK referendum will also have an impact on South African companies who have invested interests in the United Kingdom. This is the Moneymakers. I'm Bruce Whitfield. Tonight, I discuss Brexit with Chief Executive of a company that just listed on the London Stock Exchange last week, the first resources listing on the London Stock Exchange in 5 years. Chief Executive of Tharisa, Phoevos Pouroulis, is my guest. Why do you just choose to go to the London Stock Exchange 2 weeks before a potential Brexit? You guys are scared of nothing, Phoevos.
Well, thank you, Bruce, and thanks for having me on your show. The timing of the listing, I think, while we're very cognizant and take close care to pay attention to the Brexit, I think the motivating factors around the listing are more around strategy and strategic initiatives. If you look at our primary listing on the JSE, which still remains, most of our shareholder base are non-South African residents. So there's always been this intention to create a broader profile, international profile of Tharisa, and London being an obvious market with knowledge of South African mining historically was an obvious destination, and it's something we've been planning for a number of years. So the timing coincides with the Brexit debate and referendum later in the month, really is coincidental more than anything else, and our longer term strategy, we believe, is still sound in terms of opening up Tharisa, the investment case, to a broader institutional and retail market within the UK and Europe.
In the 21st century, do you really need to do that? It's called the internet, and people can find anything that they're looking for online, and the JSE's got superlative trading systems. Is it really that important to be listed on the London Stock Exchange? South African companies who've done it in the past have met with various degrees of success. It's not always been the panacea.
It hasn't, certainly, but in our case, I think we have a compelling investment case to start with. I think our business is undervalued, and there's a strong value proposition for new investors coming in. We've seen a positive reaction from the UK market, and over the years we've conducted a number of roadshows in London, and we've received positive reception, and a number of the generalist funds out of the UK are only allowed to invest within the UK exchanges. So it limits our reach in terms of accessing retail investors on the one hand, and those generalist funds who are seen to be very light on resources at the moment and are looking for new stories and new opportunities. So we're hoping to access those pools of investors, and ultimately the intention is to raise liquidity in the stock and awareness around our, we believe, compelling investment case.
You'll forgive the recollection of an old analogy that says fools go where angels fear to tread, and you're the first resources listing on the London Stock Exchange in 5 years. Now, either you are visionaries and you're the first of a new wave of listings, or you're going to be very lonely.
Look, I think that statistic of 5 years is possibly overstated. We recall a listing last year in September, prairie mining, with more exploration and development. So perhaps the details are a bit muddied between the AIM exchanges and the main board listing. But yes, I think we are one of the first in a long time to list on the LSE, bearing in mind that our primary listing still remains in Johannesburg, and it is a secondary listing. And again, as said, it is to broaden the profile, which I think we've already managed to achieve in a very short period of time. We've gotten good coverage within the UK media and press, and a very warm reception, to be honest.
How much concern do you come up against when you go to the UK and you go on your road shows and you sit across the UK media who are cynical at the very, very best of times because they've seen lots of people come and go over the years, and especially when somebody says MPRDA, lots of South Africans absolutely petrified of the level of insecurity in the South African resources sector by a regulatory regime that can't make up its mind which way to go. Are foreign investors as concerned as we are in South Africa?
Look, I think it is the number one issue plaguing the industry at the moment in terms of regulatory uncertainty, and there's been widespread debate around the issues and the promulgation of the new act, and much resistance from the Chamber of Mines and industry itself. In terms of the attitude from potential investors in the UK, most of them are savvy investors and either have investments already within the mining sector, exposure to some of the larger blue chip mining companies, and so are very close to the issue at hand. The general view, however, is that there will be some mediated agreement between the Chamber and government in a more acceptable solution or resolution. In terms of Tharisa, particularly our company, we are fully compliant in terms of our 26% ownership at the project level. So with regards to the ownership issue that has been put forward in the new charter, I think we comply as much as one can without knowing the details, the final details of the amendment. There will obviously need to be changes made if the Act comes in the current shape and form.
Now, just explain to me the difference between ownership at project level and ownership at listing level, because when I last checked, the Pouroulis family had something like 48% of Tharisa, didn't it?
Correct. So at the listed or holding company level, which is the listed entity, the family holds some 47% of the holdco. The holding company owns 74% of Tharisa Minerals, which is the South African company that owns the Tharisa mine, and we're fully empowered at that project level, with 20% held by a ladies grouping and 6% held in trust for the benefit of the communities within which we operate.
But so much, of course, depends on whether or not this notion of once empowered, always empowered holds. Because the moment, let's say, the Tharisa listing lifts off in the United Kingdom and suddenly your empowerment partners go, we're going to get out at the very first opportunity because we're onto a good thing here. You, like other mining company executives, have to go around finding yourself some new partners. Should, of course, that not be settled amicably between the Chamber and the Department of Mineral Resources.
Sure, I think it's slightly more challenging at the project level, as there are a number of preemptive rights that exist between the shareholders. Whereas if they were in the listed company, I think we could imagine that situation that you've envisaged happening. So I think there is a degree of protection at the project level.
Did you structure it that way deliberately to ensure that you would have that cover?
We structured it to be compliant with the 2014 requirement of having 26% empowerment in place, and those shareholder obligations endure beyond 2014. So it was in light of the previous charter.
No, we're not seeing too much upside in the platinum price, at least nothing too visible. Platinum languishing below $1,000 an ounce, and it doesn't get, although you're a lower cost producer of the metal, it's not getting any cheaper to produce platinum over time, is it?
It certainly isn't. If you look at the average depth of the platinum industry in South Africa being some 750 meters below surface, it is definitely not becoming cheaper to produce, with above inflationary costs creeping into the cost curve. And I think, again, one of the differentiating factors of Tharisa is that we're an open pit mine, highly mechanized, skilled labor force with a low cost dual revenue stream, which gives us that sustainable competitive advantage for 20 years, because that's the extent of our open pit. We then progress for a further 40 years underground on decline, but at much shallower levels without the requirement for refrigeration and heavy manpower. So I think structurally Tharisa is less at risk in terms of market volatility, and with our low cost structure we're able to withstand the storm. And encouragingly, our half year results were out on Monday or yesterday, and we posted a profit in very volatile commodity markets.
What does it cost you to produce an ounce of platinum?
So our all-in PGM basket cost is $492 per ounce. So in the lowest cost quartile. and that gives us a 33.8% gross profit margin in terms of our PGMs. So very healthy margin, very robust.
It does give you a cushion, of course, against this platinum price, but with the currency as weak as it is, and with the volatility of costs and the huge pressure on costs, and particularly the South African labour environment, which feels once again as if we're going to perhaps some very tight negotiations. Who are your primary unions? Are you under AMCU, or do you come under the National Union of Mine Workers?
So we employ through Tharisa directly some 500 employees, and they're unionised with NUM. We signed a 3-year wage agreement. We're in the 2nd year of that, so we won't fall into the platinum wage negotiation agreements that are happening at the moment. And we have very positive relationships with our labour force. We do have a mining contractor on site. They're unionised as well, and they've also in their 1st year of a 3-year wage agreement. So we don't see ourselves being drawn into the current negotiations that are ongoing within the industry.
But the industry is fraught. I mean, we're heading up to the 4th anniversary now of Marikana. It's coming up in August. How does that play out in terms of Tharisa?
Again, I think being a mechanised, low labour intensity mine with a skilled labour force, we're in a different risk profile to our peers who are deep level underground labour intensive mines. So over the 10 years that we've been on site at Tharisa through the exploration and feasibility phase of the project, we've had no disruption to operations through industrial action or community unrest. There have been issues. We live in Africa and operate in South Africa. There have been issues, and we would be remiss not to say that we're exposed to those same risks, but to a lesser degree.
My thanks to you. It was nice to chat to you. Phoevos Pouroulis, Chief Executive Officer of Tharisa. It is the platinum producer, PGM producer, listed in London recently. Of course, Brexit is going to play out, and that'll have whatever effect it has on the United Kingdom if and when it does go through, if more British people decide to vote for an exit from the European Union or decide to stay in. Fundamentally, though, here is a lower cost producer of PGMs in South Africa, putting its brand onto the global stage via the London Stock Exchange and inviting investment. Ultimately, though, so much of it depends on the regulatory environment and the ability of the Department of Mineral Resources to get its ducks in a row and finally publish a document with which the industry, government and of course Labour can live. Till next time on the Moneymakers, good night.